Hey, it's Al Williamson. I want to talk to you about why I think having an extended stay furnished rental is the smartest thing you can do during a pandemic. It's the way you want to set up. You should not be afraid to get going with furnished rentals, short-term rentals, extended stay rentals. And we're going to be talking about why extended stay furnished rentals is the best and why I feel that way. So I like to look at my competition and see how they're doing, especially the ones that are doing better than me, bigger than me. And the biggest one is Extended Stay America. They have like 625 hotels in the continental US, and about 69,000 rooms. So I look at them and I try to compete against them. I do not look at Airbnb host. They aren't my competition. They really are on the hobbyist, on the amateur side. I'm looking at becoming a decentralized hotel. That's that's what I'm looking to do. And if you are interested in doing something bigger than just being an Airbnb host, then you're going to like what I'm about to share. Okay, because they don't even know Extended Stay America that is doesn't even know I exist. Because I have 28 units, and they got 69,000 rooms. So, but I know whatever they do, I can do better. That's why I'm watching them. Okay, this is their new CEO, is Brian Hayes. He just took over at the beginning of the year. At the beginning of the year, he said we'll focus on a return to the basics because they kind of drifted off, and fully exploit the value inherent in our high margin extended stay business model. And they're high margin because they run their hotel with about 11 to 13 employees. A normal hotel uses about 33 because they don't do such frequent cleaning. They don't have as much churn. And they're so high margin because they don't have to pay all those extra benefits for every employee. There's overhead. But yet they earn the same amount of net income. So same amount of net income, fewer employees, that's the way to go. Okay, so this is what the company said in their second quarter 2020 report. This is their the soundbite that they want you to read, and it is crafted by them. So let's unpack it and see what we can learn about our competition. As Brian Hayes, he says, I'm proud of our company's performance during these unprecedented times. He's talking about during COVID-19. He says, our second quarter comparable system-wide RevPAR decline of 28.7%. So something went down and he's proud of it. Let's talk about that. Let's talk about what RevPAR is. RevPAR is the revenue per available room. It's like a metric that all hotels use so they can compare themselves against earlier years and also the competitors. I look at revenue per room per day, and this is the metric. They take the guest room revenue, divide by the number of rooms that are available, divide by the number of days. So if it's a year's 365 days, this is a quarter is 90 days. All right. So this is the graphic that they showed in their Q2 report. They show that they used to have a RevPAR of $53.84, $53.84, but now they have, a year later, they have a RevPAR at $38.33 and 38 cents. And that's a 28.7 decline. So that looks terrible to me. That's terrible to me. Let's look what he's talking about. What I want to point out about RevPAR is kind of like the speedometer in your car. It tells you how fast you're going. Okay, it's like a dollar per time. Okay, just like miles per hour. That's what you should think of this RevPAR number. Let's get into it a little bit more. He goes on to say that his RevPAR declined to 28.7%, being significantly better than any public hotel company in the U.S., the United States. He says that decline, that 28.7 decline, was better. And I said, really? Let me go dig up other people's RevPARs and look at them. So I looked at Wyndham, Hilton, Marriott, Hyatt, and look at that. Wyndham, they declined 71%. Hilton got crushed. They were doing 81%. Marriott just like closed doors and everything, just beat down 83, and Hyatt, one of the worst, they they declined nearly 90%. Okay, so extended stay America really held up compared to all those things. This extended stay business model, compared to those who do 1-2 night stays, was far superior, outweathered the pandemic by an order of magnitude better than these short stays. That is one reason why I focus on running my furnished rentals in a plus 30-day model, an extended stay rental model, because they just hold up. They're just superior. So they go on to say that the occupancy level has improved significantly since April, and it's now over 80%. Let's take a look at that. And occupancy, you should consider that to be the fuel gauge of the car, back to the car analogy. So RevPAR is the speedometer, speed you're going. Occupancy is the fuel gauge, how much fuel you have. So this is their April lows. In March 1, the president came out and said, by the power invested in me, I declare national emergency due to COVID. And things started dropping there. Look at that. Started peeling off occupancy as people stopped traveling, okay? And then they hit April, which is all-time low for them, 57%. But since then, here we are in August, they are back over 80%. Look at that. And that is back to where they started. That is like pre-COVID. That should indicate, and does indicate, that they have recovered from COVID and have weathered the storm in pretty good order. If something can recover, usually things drop off, and if there's a disruption, and it takes the market twice as long to recover than a drop off. So they are textbook for an ideal business, and they bounce back. They're now have recovered from April to August. That's 4 months. They recovered. Okay. The CEO says we're approaching pre-pandemic 2019 levels, and in many markets, he says, they're running positive of RevPAR from last year. So they're even outperforming last year. They bounced back and fully recovered this extended stay model. And he says this performance illustrates the strength of our unique business model, which is be laser focused on extended stays, and our singular focus on, and that's what he says on the segment, our singular focus on extended stay segment, unlike anyone else in the industry besides Al Williamson and all Al Williamson's students who focus on extended stays. Because that's what I teach. I teach people to how to run an Airbnb as an extended stay hotel. And because of this, is far superior. It is more efficient, and it can weather a storm. Okay. Some of the points that they had in their findings is that the guests are driving to the hotel. That makes sense. People want to fly. And then, if you see an extended stay hotel in your neighborhood, from there, that the average stay of 30 days is possible. So you absolutely can run an extended stay furnished rental business if you have an extended stay America in your neighborhood. So get with me, I'll teach you how to do that. But that right there is proof. You can drive the parking lot of the extended stay hotel and see if there's any cars there. And if there's a single car there, that's telling you that you could be making money, at least $500 of net income per extended stay hotel or extended stay furnished rental that you have. 6 of those is like what, about $3,000? Let's see, 500 times 6, yeah, $3,000, and that would significantly almost retire some people. So it doesn't take long, and it is not a lot of work. And they go on to say that the kitchens and refrigerators in the room was perfect for people worrying about COVID, because they can eat in and didn't have to go to restaurants. So I recommend that if you do have a furnished rental right now, that you update your headlines, because people don't really care about how great the restaurants are if they can't eat there, and also address people's fears. I always recommend that you talk about your enhanced cleaning. So those are a couple of tips if you're running a rental, a furnished rental right now. So why do I dig into their quarterlies? Why do I do all this, get nerdy? It's because looking at what Extended Stay America does is going to tell you about your market trends, okay? It tells me that their occupancy for them has bounced back. They've recovered from COVID. They've bounced back to 2019 levels. It also gives me some pricing guidance. If the demand is back in the market, then my pricing I should raise my prices back up to where they were before COVID. And that's exactly what I have done. I'm back to being profitable as I was. I made it all the way through 100% occupied myself when other Airbnb businesses were going out of business and closing and even reducing their numbers. I was increasing my numbers, okay? And customer insight, you can learn that people are driving cars. So if you want to give them a gift, maybe have a car wash coupon. Those types of insights are what you can glean by reading the quarterly reports. So if you like these type of dig-ins, digging into the data, I am always doing that because I'm trying to qualify myself to mentor people, okay? If you want my mentoring course, it is at http extendedstaylandlord.com. You can go there and see all the success stories and see all the details about my course. It's really a coaching and training program because I like to do a lot of coaching and go over data like this with my clients. If you have any questions, you can reach out to me at al@leadinglandlord.com and I'll answer your questions. And let me know if this is helpful. Leave me a comment below.